We live in the age of AGI, and it is an age with unprecedented opportunities. And as you know, here at Pioneerlands and with Pioneer Alpha, we are looking into how to capitalize on this amazing transformative technology that is artificial general intelligence. Here you see Jensen Huang and the NVIDIA Rubin system, the things at the core that drive this transformation. But how can we actually make alpha? How can we beat the market? And why do we actually beat the market with our strategy? Here we are going to reveal exactly what's behind it to actually shed some light on how you can stay ahead of the stock market and understand AGI better than anyone else. So as you know, we are very focused here on Tesla, Elon Musk, SpaceX too, but mostly Tesla, Optimus, Robotaxi, and some other transformative technologies that make Tesla the most interesting play in the entire AI space. There are other things, of course, NVIDIA, one of my favorites too, but we are focusing on Tesla. And soon we will see that Tesla will go even beyond Earth, merge very likely with SpaceX, and go all for the stars, and in a way that is actually defined on a timeline that is much, much closer than most people think. That is why my price target, as you know, is $4,000 by 2030 plus X. Now the X stands for everything SpaceX. The $4,000, different from Cathie Wood and ARK Invest, who are great by the way, but they have a 2,900 price target. I have a 4,000 price target, including Optimus, because Optimus is the key. Now, that is the opportunity we are looking at, but there are many tricks and tribulations between now and there. As you know, we live in a very complicated time. We just went through the Iran war. We just saw how important it is to predict things like that, to understand macro, to understand also the Fed, interest rates, oil, all these things beyond the individual stock. And we also saw that there can be bad times in the middle of the age of AGI. There was the fear of an AI bubble. The market went down 6% in 2026 for the first quarter, pretty bad. Tesla went down too. And when it comes to Tesla, despite being this amazing opportunity, look at this over the last 5 years. Not totally 5 years, but 4.5 years. You would be actually down, slightly down, since 2021 peak. So if you don't know what you're doing and we don't know how to actually capture alpha and actually trade these things, there can be long periods of frustration. If Tesla goes to 1,000 this year or next year, what happens next? Does it go back to 500? Do we flatline for 5 years? Do we flatline all the way to 2030 and then suddenly jump to 4,000? All of that is possible. And in order to really generate alpha and beat the market consistently, we cannot just be long-term holders. We need to be a little smarter to actually generate alpha in between and then long-term beat everyone. That is the topic of today's video, where we will look into how we actually do that. And of course, also look at the results and what else we can do about it. So let's start to dive into how this works. So I'm revealing here my method. This is developed by me based on, my work in the market since 1999. Unbelievably, that's the first time I started trading options and looked at things, but I got very serious in 2014 about these things, and then super serious with actually a track record since 2024 or end of 2023, when I decided to do this in a very focused way. And since then I developed a method that is the Pioneer Alpha and the Pioneerlands method. By the way, we're going to go into this now. This is not just about stocks. This is about predicting and understanding a reality that is increasingly and exponentially developing fast and seemingly out of control. So this method, right now, I'm using it to just generate alpha, outperform the market, and let other people participate in that, by the way. Get to this in the end. But it is more than that, as you will see. It is not just to make money, it is also to shape and engineer reality itself. Today we are only focusing on investments, today we are only focusing on stocks, but there will be more videos in Pioneerlands. Go to pioneerlands.org, by the way, where we'll cover this and think about how we actually use that ability to understand and predict the future to not just make a lot of money, but also to engineer the realities we want. So let's get started. The first step we need to take. This is a very systematic process. The first step is to understand the future on a 5 to 10 year horizon on a first principle level. We need to understand fundamentally what is robotaxi, what is autonomous transport, what is artificial general intelligence, what is artificial superintelligence, what is the role of space in this whole thing, what is the role of robots like Optimus, what is the role of other technologies, financial transformations, and also some macro. Where does Europe go? Where does Germany go? Where does the UK go? And of course, where does the United States go? Plus the other countries. So, in order to understand this reality, there is no way around a bunch of things. These three things are key. You need to do deep research, or I need to do deep research, depending on what you want to do. Deep research means it's not a joke. We need to deeply understand these technologies. What is a robot? How is it being built? What is the latest theory on it? What is the latest strategy on it? What is FSD? What are end-to-end neural nets in autonomous driving? What are self-landing rockets? What are reusable rockets? Where are they at in the development phase? What is Vera Rubin, the chip you saw in the beginning of this video? What are LLMs? Are LLMs actually capable of getting us to artificial general intelligence? Of course, also the central question, what is artificial general intelligence? There's an academic version of it. There's an economic version of it. AGI as simply a thing that can replace human workers comprehensively, the median human worker, in one of 12 central economic verticals. Which leads me to the second piece, economic modeling. We can't just do first principle understanding. We need to convert that into solid and robust economic models of individual verticals, but also of stocks, of Tesla, of companies, of Nvidia, SpaceX, as well as countries. We have to understand where does the GDP go. We need to understand all these things. And fortunately, we have some smart people here in Pioneer Lands, Pioneer Alpha, and of course, AI is helping us exponentially to get these models done. And this is a whole different video to explain how we do these models, because you need to be very efficient. In principle, it is better to have a lot of models broadly that cover a lot of ground and focus on reduced, minimized models that just hit the key points instead of getting lost right into, oh, what is the free cash flow of Tesla robotaxi division in 2034? That's not the most important question. Okay, once we have this understanding, a first principle understanding that is quantified with economic models about the key verticals about across a 5 to 10 year horizon, we go to the next place, the next piece of the equation. And as you will see, this is a funnel here. We start with understanding the big picture, modeling out the fundamental principles. We understand fundamentally this is a 5 trillion, 10 trillion, $15 trillion TAM, whatever it is, depending on what we are talking about. Or it's an unlimited TAM. In the case of AI satellites, for example, there is no ceiling, which is very interesting. So also with robots, arguably, maybe there's also no ceiling. With AGI, of course, there's no ceiling. So now we are entering this whole thing where there are no ceilings anymore on the economic value that can be created through one singular trajectory. But that's a 5 to 10 year horizon. The next step, this funnels it down, brings the actual design time point closer to the current reality, looks at a 12-month horizon. Once you understand, you can predict. And predictions need to be shorter term, otherwise they're useless in order to get to the operational point. Number 3 in a minute. So what does predict mean? Now we are adding to these economic models and first principle trajectories, concrete catalysts, identify concrete forcing functions, and put on timing probabilities over the next 12 months. For example, Optimus, Tesla Optimus, the humanoid robot that's coming out. We now know from the earnings call that we have a 90-day timeline to the reveal of Optimus version V3 that is very likely the commercial version, the first commercial version of the Optimus robot. Now, a lot of people have waited for this moment for a long time, but now, because of sentiment and other things that are very bad around Tesla, which is very good for us because it's free alpha, now we know, okay, in 90 days, they're going to reveal that. Of course, we have to do some timing probabilities. Is Elon going to be late? I say not likely that they're very late. I was right on Cybercap. I'm probably right here because too long for this video, but it's unlikely that Optimus will be delayed much more. So then we can know, okay, this is happening. Is that a big catalyst? Is it a forcing function? No, it's not a forcing function because Optimus reveal is no cash flow. There is no forcing function. It doesn't force analysts who don't like Tesla to actually upgrade the stock. But it's a soft catalyst. The people who are fans, the people who like Tesla, they get a boost out of this seeing the actual robot. And of course, we have to put on probabilities. How likely is this robot going to be very good? I think it's very likely that it is going to be quite compelling. So this is just one example. Another example, of course, is Robotaxi. What is happening? Predicted that they will keep the Cybercab scaling timing on the manufacturing timeline in April, and they did. And now we are in this weird zone where everyone is disappointed that Robotaxi isn't scaling. As I'm saying, once they hit 1,800 Robotaxis in full operation, that is your forcing function that will drive the price to $600 to $1,000. So we know that for sure. I know that for sure for many reasons. And now the next question is, okay, but when is this happening? That is the trick here on a 12-month horizon. And that leads me to number 3. Once you understand the future and you predict the next year with the probabilities, forcing functions and catalysts, plus delay risks, you can start to pinpoint the actual stock price. 4-week horizon. Now it's getting serious. 4-week horizon. That is the thing where there's the meat for alpha. 4 weeks, that's where the meat happens. That's where we outperform the market. And of course, the closer we get to today in the stock market, the exponentially more difficult and risky everything becomes. So 4 week is a very nice thing. Often I do 1 week, 1 to 4 weeks, where we want to actually predict what happens to the stock. And of course, you know that this is the holy grail of investing. The holy grail of investing. If you just don't want to be lame and simply beat the market, that's easy. You just buy some Tesla and Nvidia and wait. But here, it's a little bit different. We want to actively generate alpha. So pinpoint, how does this work? Here it gets a little bit art and science at the same time. You need to have a very, very, very good take on high-level technical analysis. Not crazy technical analysis. You just have to understand where was the all-time high? Where was the company at? December 16th, 2025 was the last all-time high at $489 for Tesla, for example. And we say, well, we are a much stronger company now than back then. We are 25% below that. That is very good. I like that, okay, on a technical level, because we know there's this all-time high not too long ago, and we are just stronger now and much cheaper. You need to understand fundamental valuation and fair value. How much below our predict model and our understand model are we for Tesla? Well, we are roughly at a 50% discount right now to what the stock is actually worth in terms of the deeper model. So that's very good. We get a deep, steep discount to the real value. Plus we get a discount to the technical value. Then we have to look at macro, very important for pinpointing and predicting the actual stock moves. We have to zoom out of Tesla or Nvidia, whatever we are looking at, and look at the greater context, because even if technical looks good and fundamental looks excellent, if World War III breaks out, if oil goes to 250, it's not going to help us. We are going to have a crash. So we need to also see macro, Iran, Trump, the embargo, oil price, and other things. The new Fed chair. Is that all a risk in the next 4 weeks? Likely to escalate or not? And you can't get around that. If you want to do that, you need to be very good in having a grasp of that. And I'm reasonably good at that. I'm better than everyone else I know, but I'm sometimes wrong. It's not about being wrong or right. It's about understanding your confidence levels and intervals for your predictions. So for Iran, I was sure about certain things. I was reasonably sure that I was right about a quick taco, for example, that Trump will stop the war within a week. I was reasonably sure about that, and I was wrong. But that didn't hurt me too much, because my meta first principle that he can't escalate that war was true. So, there needs to be buffers built into everything we're doing here, and everything, when we pinpoint things, actually does not lead to a firm prediction, but it leads to something that I call probabilistic scenario constellations. So instead of saying Tesla will be at 400, I made a video that I believe it's likely we go back to 400 very soon, right, next week or whatever. Probabilistic scenario constellations mean that's not how you think. You have to think about, okay, what are the 3 most likely scenarios and how likely are they? For example, right now, Tesla is undervalued, all kinds of things are happening after earnings, senseless sell-off because of capex, and you know the whole story probably. We are perfectly destined to go back to 400 very quickly. That's what I believe. That's number 1 most likely scenario. We are back at 400 within the next week or 2 weeks. Okay? What is scenario number 2? Scenario number 2 is we are just sidelining because after earnings you get this hit even if it's irrational and the stock tends to linger around wherever it drops. That's just something I know. So, okay, that's the second most likely scenario. Less likely than we are going to 400, but still reasonably likely. Okay, so we can hover around here, maybe go a little up and not to 400. I would put a lower probability on that than 400, but still reasonable. What is the third probability? That we drop, of course. Okay, can we drop a lot? Can we drop a lot? And I would say no, given the whole technical analysis, fair value, and the market situation, I do not think we can drop a lot. I think it's incredibly likely, so I'm taking this from number 3 and put it to number 4. I think it's incredibly unlikely, okay? I'm just giving you this example right now. What is number 3? Number 3 is we run up to 420, 430, 440 very quickly. I think that is actually the third most likely scenario. Not likely, but possible. All we need is Robotaxi has now 25 unsupervised, going steep through the roof, by the way. And so the probability, if we need to look at Robotaxi tracker, for example, the probability that this just keeps scaling and suddenly we have 100 unsupervised probably in 1 or 2 weeks is not impossible, right? It's not the least likely thing. So if you look, for example, at the Robotaxi tracker, you have to keep your eyes on everything. And you see here, look, this looks pretty exponential to me. This is unsupervised Tesla Robotaxis, plus the cybercaps are rolling out. So could that lead to the stock going back to all-time highs within 4 weeks? Absolutely, it could. I don't think it's likely, but it's more likely than the stock dropping from here, okay? So now I'm just giving you that example for the method. So now we pinpointed it. You have your scenarios. You always have to ask yourself, what is the most likely? Is it most likely to drop more or to run up like crazy or to go up significantly but not too much to 400 or sidelining? I think 400 number 1, sidelining number 2, run up to 420, 440 number 3, dropping below 360 or something, extremely unlikely number 4. And once you have made up your mind and put these probabilities in place and put your confidence intervals on each of them so you understand how sure you are, you can do the final thing, which is engineer. So when I say engineer, some people would just call it execute, but it's not that simple. Okay, because what do you do now? That is why I like options. You have a blend between your core position where you say, I want to have 50% of my net worth in Tesla, whatever, 25% of my net worth, of my liquid net worth in Tesla, whatever your thing is, because I believe in Tesla, I don't want to miss out. And then the rest is there for alpha trading. Maybe you want to hedge, maybe you want to buy other stocks. But here you have pinpointed your probabilistic scenario constellation and can now layer the options around it. Now, what does it mean? That is why I'm always telling everyone I'm not an options trader. I don't believe in it. Maybe some people know how to do it. I don't know how to do it. What I do know how to do is how to predict the future, understand the future, predict the future, and then pinpoint the probabilistic scenario constellation and then layer my options around it so they reflect my convictions. Let me give you an example. Right now, what am I the most sure about? I'm the most sure that Tesla will not drop much more, okay? I'm also reasonably sure that a huge run is unlikely, okay? Therefore, what I'm gonna do is not just buy a lot of stocks on margin or something, but layer my options around it. And how do I do that? I look at the stock where it's right now. For example, here you see it's 379. And then I say, well, the probability this drops below 370 is actually very low. And if it does, it jumps right back up. That is what I actually believe right now. It could go to 400. It could also hover around here. So I am selling weekly puts en masse right now. En masse means way above 100% exposure. Not 10x exposure, I'm not insane, right? You need to always consider tail risk exists and you have to watch this hour by hour. Don't copy me. If you do that, make it a full-time job. You cannot not look at the stock for longer than 15 minutes if you do that. Just to make clear, this is not a joke. Because if it goes wrong, you need to pull the plug and you know how to manage your risk. So I'm very at the money and slightly out of the money. Short puts, which allows me, if you're at 380, 385, 375, 372.5 puts, you can go all in or don't do anything, right? You understand. And then you make a lot of money. So if I end up, for example, at above 380 this week, I will make tremendous alpha over Tesla. I'm telling you, tremendous alpha. We are talking multiple percentage points just this week. Now, of course, if Tesla goes to 420 this week, I will also have to act very fast. Not because I'm losing money, but I'm losing alpha, right? If Tesla goes up too much, I'm not making money with these, at the money, out of the money puts. So I need to stack very quickly, right? So you need to this is not like a beginner thing. So you do options layering, as I explained. You have your core position, you do hedging and stacking. So if anything goes wrong, you have to act fast, but also if it goes wrong in the right direction. Because I don't want to sit here with my 380 short puts and Tesla goes to 420 and I'm not doing anything. If that happens, you have to stack. Well, I have to stack to maintain my alpha. I have to immediately sell the same amount at 390, then the same amount at 400 hourly, right? If this happens, if there's a run, in order to maintain my advantage over Tesla. Otherwise, I'm just sitting there and Tesla's outperforming me. So that is in a nutshell, the method. And I want to conclude with the last sentence here. When you engineer, if you want to do anything like that, there's always a bias towards downside protection. Of course, I rather lose up on the upside than getting crushed on the downside. That's why I like at the money and out of the money short puts more than deep in the money puts, where you of course make more money if it goes up, but you have no buffer. I love the buffer. My best weeks are when I predict Tesla goes up and Tesla goes actually down 1% or something, and I'm still completely crushing it even more than before in terms of alpha, because I have this nice premium buffer. That happened after earnings. I made a ton of alpha over earnings, even though I was technically wrong. I said it's going to go up or flat, and it went a little bit down. But I still made a killing because I had all these short puts at and slightly out of the money. So that's kind of what it is. And let's get to the important point. What does it all mean? What is the result of all of that? You probably know that we had a pretty good performance so far. Since inception 2024 in January, we are up 104%. Very non-random, because that was the method I applied here. We have an alpha over the S&P of 54 percentage points. Let that sink in. If you invested $1 million in the S&P, you would be at 1.5 million. Not bad. But with Pioneer Alpha, you would be at 2.04 million. So effectively $540,000 more gains on $1 million. That's pretty serious for 2 years. Year to date, I think we are just roughly beating the S&P 500 with a small little tiny piece, but we are beating Tesla by a ton. And as you see, Tesla, let's say since inception, actually beats the S&P. Interestingly enough, even though that was not the greatest time for Tesla, Tesla still beats the S&P by 2%, and we are beating Tesla by 52%. Okay? Year to date, this was perfect. I'm very proud of what we did so far in 2026. I predicted Q1 perfectly. I said in December for Tesla, Q1 is going to be bad. Tesla down 15% until as of April 27th. And we are up 5.23%, so we have an effective alpha. Again, if you put $1 million into Tesla, January 1st of this year or December 31st last year, that's the last 4 months, you would have lost $150,000. Pioneer Alpha, you would be up $50,000 on the million, which means you would have $210,000 more than investing everything into Tesla. So I'm pretty proud of this. Works pretty well across all these different time periods, looking good. And that is why we are also now launching something very interesting, because people ask me, of course, Joe, mostly my followers on YouTube, can we invest in this thing? And I first said no, because I was just trading my own money. But since September last year, I was thinking about it, and we were actually working on institutionalizing Pioneer Alpha. And we have now completed that. We have a beautiful securitization company now in Luxembourg, one of the gold standard jurisdictions for that. Nice government regulation and oversight. We have a great team there that works directly with government compliance on these structures. And this is a bond. It is a performance-linked bond where we designed something very cool. And this is just an update here on the Pioneer Reserve. That is the name of the company, Pioneer Reserve. And we are issuing these different types of bonds only for qualified investors. If you're interested in the company and what this all is and how it works, go to pioneeralpha.org. But here is basically what we are modeling out on this for participation. It's a beautiful instrument. And what it does is the following. It's a very straightforward deal we came up with here. And the deal is full Tesla upside, 50% Pioneer Alpha on top. So what does it mean? The money that goes into the bond for any investor in the bond, American investor, EU investor, UK investor, Swiss investor. So we have multiple jurisdictions this is open to. So if a person puts in $100,000, for example, into the bond, it's performance linked, it's 3 years. And whatever the Pioneer Alpha portfolio does, the investors get back 3-year maturity after 1.5% annual operating expenses. Now comes the trick. It is capped at the Tesla performance, right? So 100% without any fees other than operating expenses up to Tesla's performance. So if Tesla is up in 3 years, 300%, okay, and Pioneer Alpha, let's say, is up 400%, just as an example, no promise, of course, the bond payout is 350%. So whatever Pioneer Alpha makes above Tesla, half of that goes to the investors of the bondholders. If Tesla is up 20% because everything went wrong, not everything, but a lot went wrong with Tesla, and Pioneer Alpha is up 80%, the investors get 20% plus the differential, which is 50%. And if Tesla is up 50% and Pioneer Alpha is 20%, so we underperform Tesla, then unfortunately the investors of bondholders only get the Pioneer Alpha performance. And if Tesla is down 20% and Pioneer Alpha is down 10%, still Alpha over Tesla, investors get negative 15%. So in all cases where Pioneer Alpha is better than Tesla, the bondholders will get more money than if they would have invested into Tesla. That's the simple deal. So it is made for people who love the channel, who love the performance of Pioneer Alpha and believe I can continue that. Not a promise. Everything can go wrong all the time when it comes to money and investing, of course. But people who believe I don't want to lose my own money, it's mostly my own money here. This is the instrument. Very proud of the team. Thank you, team, for making this all happen. We will have other bonds too. By the way, we have other bonds. I'm not going to go into that now. It's a beautiful thing where we have basically different vehicles on top of the Pioneer Alpha portfolio that converts all that power of the H of AGI into hopefully continuously strong returns if we continue successfully as we've done in the past. There are different bond structures here that capture the upside in different ways. Tesla 50 is really for people who believe in Tesla, who want to have an instrument that if it performs well, the instrument beats Tesla, beats the Tesla position. That's the simple premise here. The growth 45 is for people who are happy with up to 45% gains a year, but don't need to make more. And all the excess gains are used, not all the excess gains, but a lot of the excess gains are used to basically forward buffer the 45%. So this thing is geared towards trying to stabilize high returns in the future. So if we exceed 45%, which it's likely to happen one year or the other, that goes into a buffer. And if the next year looks bad, these guys will still get more than the portfolio makes because they draw down from the buffer. So it's a buffering mechanism. Very cool. This is an income bond that pays 12% per year in cash, plus up to 100% on top at maturity. Performance is a little lower in the best case than this bond, but it has annual payments. So here's for Tesla fans who believe Tesla is going to be amazing, who also believe Pioneer Alpha can keep beating Tesla and want to have upside over Tesla. Here's for people who want up to 45% growth per year, of course, with portfolio risk combined, but higher yield with a buffer system that helps them out in bad years if the buffer is full. Pre-funded, by the way, with 10% upfront funded buffer. It's pretty cool. And here you have the income people who want 1% cash per month paid as 3% quarterly. So that's what we are doing here. It's all a big adventure, of course. We are now institutionalized. I love it. And my main focus will remain, of course, to do this here. That's how I make most of my money, by making myself money. And by making sure I make more than Tesla. Of course, I can't make sure, I can't promise this, but it's working like a charm. Look at this. Today was a very good day. Hey, on this channel, we do something very important. We deeply analyze, understand, and predict capital, AGI, and politics. Not just to beat the markets and make a lot of money, even though that's important, but also to build a new society and make the future good for all of us, the pioneers. If you want to help me on this journey, you can do that by doing a very simple thing. Like and subscribe. It helps me a lot. Thank you so much for your support, and let's get back to the video. So, I hope that was interesting. You enjoyed that. We will have more coming out on robotaxi very soon because, as you know, transformative things are happening here. People don't understand what that curve actually means. Look at this. Isn't that crazy, fleet growth? So we are following this like hawks. The most interesting question with robotaxi will be when people actually get it, right? When will this curve translate into a real catalyst for investors where they realize maybe this is just happening? Maybe this is not in the future. Maybe all the talk about delays is stupid talk. Maybe we are watching the most historic transformation of transportation in real time. It will be interesting to see when that time is. Is it at 50 robotaxis, at 100 or at 1,000? We will see, but at that speed, 5 robotaxis a day, it's not going to take very long. Anyways, I hope that was interesting, and I see you very soon.